pretty good run of hogs every day the last couple weeks.
Hi, everybody. Welcome back to the Comstock channel. I'm Marlin Bohling with you, and I'm joined today by Justin McKinney of Comstock Investments. And we are going to take a look at our market action here on a Tuesday. And Justin, as a part of the market action, you have to include the discussion about the latest crop progress and condition numbers from USDA that got released on Monday afternoon. And if you don't mind, I'd like to walk through these with you and with everybody in the audience just to see what the latest numbers entail here this week. So let's take a look at some of these. Let's start with a look at the corn planting progress numbers. And here's just kind of a general map that we had put together here at Comstock of corn planting progress. And you can see that in Iowa, making pretty good progress, 34% done already on the corn planting. And this would be as of Sunday, I believe, is how they do that. Look at Missouri, 47%. Wow. So they're moving right along. North Carolina and Texas are always well ahead of the rest of the bunch just because of their latitude and their climate. But anyway, all in all, not a bad look there. When you look at the overall numbers, I know this is kind of hard to read here, but in general, if you look at the bottom here, the 18-state average for this week, 24% done, and the 5-year average is 22% done. So for those of you watching at home or viewing this, you can pick out your own state there to see how your progress is running. Use this third column here if you want to figure out what this week's numbers were. In general, running ahead of the average pace, so not too bad. Now, looking at the soybean numbers here, Justin, you have 25% done in Iowa, and you have 45% done in Missouri. Wow, that's a lot of progress there. Even in Illinois, 22% done. Actually, 45% was Arkansas. I beg your pardon there. But anyway, pretty good progress overall. And here again, if you look at the national numbers, we are 18% done as of last Sunday. And that would compare to, well, let's see, the week before we had 8%. So the 4-year average, or 5-year average rather, is 12%. So we're running ahead of that by 6 points. Pretty good progress overall when you look at the corn numbers and the soybean numbers overall. You are located around Rochester, Minnesota, right?
Yes, sir. Southeast part of Minnesota. Very slow planting progress here. We've been pretty wet. Just getting started. We're probably in that 5% range for planting progress in the immediate area here. If you move north and west towards that South Dakota, North Dakota, Minnesota triangle in there, you know, I've got a lot of guys finishing up corn already up there in that, you know, 75, 80% planted range. Some of them even done already. So dry conditions, extremely dry out there. They got the planters rolling. Part of it, as it was so dry and fit. The other part of it was that they were battled the weather so much last year that you just don't want to deal with that flooding or those late season, you know, rains and get the crop in that they did last year. There's a couple guys that held back early last year that at the end of the season really wish that, you know, maybe we would have pushed it. So lesson learned. Whether it pans out or not, time will tell. But planters definitely rolling here in Minnesota.
Well, I was kind of concerned about your particular area. Over the weekend, there was a lot of talk about potentially severe weather, big tornadoes, large hail, damaging winds, and maybe flooding rains and everything. And I was concerned about where you live there in southeast Minnesota. Did that turn out to be a realistic threat, or was it a bunch of hype? What do you think here?
Well, you know, a bunch of hype for the most part. We did get plenty of rain out of it. I live in town, so I'll be honest, I don't have a rain gauge out. It really doesn't matter when it rains in town. But we got quite a bit of rain here last night, a little bit of pea-sized hail, 25, 30 mile an hour winds. So all things considered, we really dodged a bullet on that one here.
Usually you'll take the moisture, right, in a case like that.
Right. Yeah, absolutely.
Now, I know that the planters have been rolling hot and heavy there, and you said in Minnesota, some areas like in the southeast corner haven't made that much progress, but you don't have to go very far south, do you, as you drop down into Iowa to where you had quite a bit of really big planting activity last week?
Well, the northeast corridor of Iowa is still, what I would say lagging for. There's a pretty good chunk in there that's a little wet yet, but you don't have to get very far to the west and maybe even south, but to the west of that towards I-35, that corridor, they're slamming crop in the ground, corn and beans, moving right along pretty rapidly. It's hard to dispute the yield benefits of getting those beans in the ground early. So everybody is hitting the field, both barrels blazing.
You and I have talked in the past about the USDA outlook numbers. Everybody's kind of hovering around that 95 million acre mark on corn. Have you changed your mind on that at all?
No, I don't necessarily think so. You look at this whole bidding of acres or buying of acres, and so many people run two planters now. And as we mentioned just a minute ago, throwing beans in the ground at the same time as corn. Maybe not all that far north of here in Minnesota. They'll give it a week or so before they really get into the beans. But you look at the general corn belt, Iowa, Indiana, Ohio, which east of the Mississippi was slightly behind on their numbers, or not as good as the west part of the Mississippi for sure. But you wonder how many acres of those can be switched when you're running with two planters. So I think that's probably where we come in on the USDA number, depending on what we lose in the south with the flooding. But that's kind of my bias at this time.
I know you have quite a few customers and clients in the Dakotas, let's say North and South Dakota, the Northern Plains. What are you hearing from them? Are they getting a good start on planting season, or is it just too cold up there?
Most of my guys are really hammered on the corn up there. A little bit of wheat wet in the ground. Again, wheat's not super profitable right now, so it's hard to get over excited about it. But there was a few people that did get some wheat planted timely, so hopefully that'll amount to pretty good yields for them this year.
Well, something else that they plant up in that part of the country, it's a little bit unique in that region, is sugar beets. That's planted mainly in what I consider to be the high plains, the northern plains, and then you get over into Minnesota as well. So here's a look at sugar beet planting progress as of Sunday. 54% done nationwide. Right there in Minnesota where you are, you're well ahead of schedule at 44% done. North Dakota is a big producer, 31% compared to a 16% average. Sugar beets can be a big money crop, can it, up there?
It sure can, depending on, what the price of sugar ends up being and the yields. But last couple of years, they were fairly profitable for producers. If you have some acres available and could get in the fields, obviously, they went right ahead and slammed those in. I got a couple sugar beet growers myself that are done planting sugar beets already. And
really? I know myself, there's a lot of sugar beets produced in Nebraska and Colorado. They don't even show up on the USDA list at all. And I was surprised that Michigan is such a big producer as well.
Yeah, I mean, wherever there's a sugar co-op or marketing pool, you see some of those acres. But those acres are hard to give up if you are historically a sugar beet grower, because they have been lucrative.
Lots of co-ops out there too, as far as the sugar processors out there. Rice planting, here's something you don't talk about too much. 64% done on rice planting across the U.S. here compared to a 51% average. Now, I know we have viewers and listeners in the southern parts of the country here. Rice can be a big money crop out there. But that's pretty good progress. And you look at Arkansas, 68% done when they normally would have 50% by this time of the year. Arkansas is a big producer of rice, and Louisiana's up there. They're almost done already at 92%. So do you think that's going to hurt that rice market?
It sure could. I think we actually sneak in and maybe pick up a few acres on that rice.
Really?
Well, as everything else, soybeans aren't terribly profitable. Corn is backed off here. If there's some acres that are up for grab, I think you may pick up a few rice acres as far along as that planting progress is.
You think they would maybe come out better than cotton this year?
Well, I think anything comes out better than
anything.
Cotton. Maybe not wheat, but anything but cotton and wheat.
Okay, so that's a look at our rice planting. Oats, that's a big crop. Even in Texas, I'm surprised how many oats are in Texas. You think of that more as a northern crop, and maybe in Canada, they're 61% done planting on the national average compared to a 53% average. So they're moving right along there as well. Let's take a look at spring wheat planting. That's a big one in the northern plains. So 30% done against a 21% average. It's kind of nice to see spring wheat with rapid advance on planting progress for a change. Usually they run behind.
Absolutely. And there again goes back to the extreme dry conditions that we've had out here and in the West and Northwest. So spring wheat plantings getting put in the ground. We'd sure hope to see a rally in that market so we could probably get some, or at least look at getting some of that hedged off here as we move forward. But yeah, planting progress. I still have some guys trying to put some spring wheat in the ground, but we'll see where the acres end up on that. It's probably a little early to tell, but they may pick up a few acres up in that northern part, but we'll see.
Do you think spring wheat in the marketplace maybe has a little bit more advantage over Chicago and Kansas City wheat, or do you think they're all the same?
Yeah, I mean, obviously, price wise, the demand, or we've seen the spring wheat move. It very well could. We'll see how that Kansas crop turns out. I believe the wheat tour starts in a week or two. You usually follow that pretty close. So we'll see how that Kansas City wheat tour turns out. I know Eric's been on and talked significantly about the conditions in eastern Oklahoma, Kansas regions looking pretty good. The last weather front to move through obviously benefited those Kansas City wheat acres as the conditions were up 4 or 5% on the week. So we'll see how that turns out. However, when you look at a global picture, we are starting to get some dry pockets in Ukraine. They're isolated to the Ukraine area as we move forward. And we'll see how that turns out in the May and June, that critical grain fill time for them. If it does spread into Russia, maybe we got a little bit of a wheat story. So I would kind of holding my enthusiasm for the wheat, but cautiously optimistic, maybe that we see a little bit of a bounce on that.
But when you look at winter wheat, 27% is already headed versus a 22% average. So we're actually running a little ahead of schedule this year. Let's look at the big wheat state of Kansas here. If you go across, 19% headed already. By now, they normally would have 10% done. How about Oklahoma? 44%. They're 4 points ahead of their 5-year average, which is normally 40. So it seems like it's coming along on the progress for the winter wheat. If you look at the condition, this week you combine the good to excellent ratings, we're at 49%. Last week we were at 45%. So we picked up about 4 points in the condition on the wheat. And I just wondered how much that had to do with the drop in the wheat prices that we saw today. I mean, the grain market was just kind of a mess today.
Possibly, I'm sure that played into it. The above average planting intent, the planting progress. There's several factors. There just wasn't anything bullish in the market here today. Felt like a risk off day. People squaring up. We do have the May futures going into delivery tomorrow. So there could be some position squaring, a little bit of negative overtone on the market. I didn't see a lot that led me to believe that we should be down, 9 to 10 cents in grains, but here we are. So we'll see what we come at tomorrow, but felt like a risk off day pretty much across the board. The wheat market did come a little bit towards the end. Only a couple cents off the lows, but we did make a little bit of attempt at the end.
So a lot of farmers are asking what in the world happened with the corn and soybeans. They wondered if there was something like in the tariff news or something that threw them over the edge. But was there really anything like that or not?
Yeah, I didn't see anything here today, Marlin, that was earth-shattering. As we move forward, we do have that delivery here. So it's kind of one of those things that you wonder if people were just squaring. The US dollar was a little bit higher. It could have been a little bit of the problems here today, but there wasn't a ton out there today.
If you look at the way the grain markets performed, it was pretty sad all across the board there. And then I take a look at the meat markets. What do you say about the livestock trade on the cattle side? It's just a juggernaut, right?
Yeah, explosive. April cattle expire tomorrow. Still some open interest left in that needs to get cleaned out. We got to clean that out. And then the question becomes, Marlin, you look at the spreads, April at 216, May at 210. Our cattle instantly worth $6 less than, on Thursday. Right now, I'm getting reports in from clients looking to move some live cattle to the packers. Hearing bids significantly higher than last week. So, you look at that April expiring, the June $6 under. We continue to make highs. We put about $11 on the boxes, the choice boxes in the last couple of days. This thing just has a lot of power behind it. And when the consumer says enough is enough, I don't know. But we did move 67 loads beef on the midday at higher money. Yearling season coming around the corner. Like all markets, they look great until they don't. But this one definitely looks like it has a little bit of power left in it.
So if, or maybe I should say when, we hit $300 on feeders, is that just going to blow everything up?
Yeah, that's a good question, and I actually put it in the Comstock report this morning. Personally, I have a hedge offer in at 297, 90 or 95. I'd have to go look, but I even put it when I see those bullish numbers come across my desk, it even thinks to me as a producer, man, I better cancel that offer before it gets hit, right? The old producer cancel if close offer. But I missed it by 10 cents today on getting a fill. We'll see what tomorrow brings, but it does feel like a self-fulfilling prophecy here. We just keep seeing those feeders trade higher and higher and higher. And to piggyback that, you also see the paper cattle crush widening out to larger margins. So as we see corn drop down, there's still money there on the paper side of it. I would argue that the live end of portion of it's getting plenty skinny enough for a person putting cattle in the lot, but it doesn't seem to be slowing anybody down yet.
It can be rather hazardous, can it? If you're waiting around for a big round number, a lot of times it'll get within a stone's throw and maybe not quite get there.
Oh, yeah, I've seen that in my 21 years so many times. $7 corn trades $6.99. $2 cattle 2 years ago traded $199.70. So my target was $3 on feeders. If I'm a couple bucks early to the game, I'm locking up cattle that we had to pay an awful lot to originate to the spring, more than I really wanted to. But on the same hand, I need to hedge those off and lock up more than what I thought I was probably going to get on the other end. If I leave a few bucks on the table, I guess I'm okay with that.
Yeah, I mean, if you rode the ride that far, I mean, you're way ahead of the game already the way it is. Just for the sake of saying you hit the top and missing it, I don't know if it's really worth it right now. Now, when I look at the lean hog trade, they look like they ran out of gas. Cattle market surged higher again. Hogs, not so much. They're just kind of bumping their head the way it seems.
Yeah, you look at that hog complex. Packer interest the last couple of weeks. We've been buying a pretty good run of hogs every day in the last couple of weeks. Slowed down yesterday. We'll see what the final count is today when the report comes out. But, you look at that cutout was off about 42 cents at noon. We've been trading that cutout between, 92, 93, and 98. Dollars were 97. I think we even bumped up to 100 a couple of days in there. But as a general rule, we have not really had that momentum shift in the hog complex that we have in the beef. We've been talking about it for what feels like a year and a half and might actually be a year and a half. But we look at the relationship, the beef to pork price. Everybody keeps thinking pork is way undervalued and it needs to make a move. Yet we continue to have good movement of this pork, but we can't get the packers or we can't get the futures to roll over and move higher. We did take out some resistance last week. I thought that maybe we would, build off of that, but still just lacking some steam on that.
The thing that caught my attention earlier today, I was looking at that chart. Let's see, I've got a June lean hog chart pulled up here. And on a daily, it looks like I like to follow stochastics quite a bit. And it looks like the fast stochastic line crossed under the longer one, the slower stochastic line today. And that can be a bearish sign, especially if you're in kind of an overbought market, can it?
Yes. And the funds were net buyers of hog contracts last week. They trade those technical markets pretty heavy. The 23-day exponential is sitting away, is under that June market. So we could see a little bit setback and test that market, but only time will tell on those hogs. The bellies have been holding up pretty decent. We're trading about I think today at the midday we had $152 belly. So if we can keep those bellies moving, we probably got some good footing underneath those hogs. But yeah, the technical picture, and you look at the daily chart and things like that, it could get a little dicey here. We do need something to push us through.
Well, as we get ready to wrap things up here, I know I had talked with you right before the weekend. You were talking, I believe, about turning cattle out on pasture this week. Is that right?
Yeah, we elected to wait the storm out because I didn't want to chase them down. I think we're ready past the storm. Grass is getting plenty tall enough to turn them out. So hopefully this weekend we can get that done.
So pasture conditions look fine up there, right?
Yeah, they do. We were extremely dry. Southwest Wisconsin, where our cattle are, was extremely dry. We've gotten 7-8 inches of rain in the last 10 days. Grass really is greened up, and it's time to get something out on there.
Well, good deal. Well, good luck with that. And yeah, my experience, if I ever tried to turn cattle out to pasture when there was a storm coming up, just right through the fence they go.
Yeah, I'm not into that.
So yeah, probably a good choice to wait for a day or two. All righty. Well, thank you for joining us. I appreciate all the insight into the markets here, Justin. Good to talk with you again. That's Justin McKinney of Comstock Investments with us here on a Tuesday look at the markets. Appreciate you joining us. For producer Brianne Jenkins, I'm Marlin Bohling, and we'll catch you next time right here on the Comstock channel. Futures trading involves risk. The risk of loss in trading futures and or options is substantial, and each investor and or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.